Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Singapore first quarter GDP first read was announced about an hour ago. It came in at a number of 1.1% versus an estimate of 0.2%. So it's a huge number on the upside. Immediately we saw a reaction on the on the dollar Sing, as we see on this chart here. Let me just bring it up. We see this big red candle down. This was actually what happened as a result of the numbers which caught the market by surprise, highlighted here. That big move down was consolidated for perhaps 2 bars about half an hour, and we are starting to see fresh lows once more. If you look at the monthly, or rather the daily chart, we are actually seeing the Sing dollar, or the dollar Sing, actually trade within this narrow channel down. Which, if this channel continues, we may see tests, or we may see the dollar Sing test once more around the 134 level or so, something that we have not seen for at least the last month and a half or so. It's obviously going to be interesting. The accompanying statements from the Ministry of Trade and Industry will obviously be scrutinized, but something that we observed in the number was that a lot of the reason for that bigger than expected number came in from construction. Construction here could have been contributed largely from the public sector as opposed to the private sector, which may not be as good as what we had wanted to see. Anyway, it's still early days in the trade, and we will definitely keep an eye on this. A lot of attention for other stories, a lot of attention the last couple of days has also been on SGX, a local stock that we are following. SGX, as you see here, is opening up again about 1%, up 9 cents or so, trading at around 846 or so. SGX will report earnings on the 22nd of February later this month. We have seen the stock actually trade up very nicely, breaking above first resistance of around the 830 level and pushing to perhaps testing around the 870 where we have flagged here. Now this is obviously a break on very good momentum, and it could possibly hit higher to around the 870 level or so. Certain motivations for the stock could be rumors in the market that suggest there is a potential for a Singapore-Hong Kong, or rather a Singapore-China stock connect, something similar to what we have seen fueling the big moves in the Hong Kong markets of the late week or so. Something that we're keeping an eye on, and we are definitely, we wrote a bit more on this in our daily piece. Please look out in our website under the news and analysis section of the Singapore CMC website. Finally, back to Forex, or rather FX, just a move that I wanted to perhaps flag. Now, this is the Aussie dollar chart. This big move here came on the back of a very weak export numbers from China. But importantly, what I want to highlight is the fact that we have seen this 76 level being tested at least on 3 different occasions itself. It's obviously going to be a key support level. If we do not see this big hold or further momentum of the downside, we could see this thing come down to as low as around the 73 level. But obviously motivations for this would have to be further news coming from the US, Australia, or also from China. Just a few thoughts for today. Happy trading, good luck. Thank you very much. Bye.